Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, July 8th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. I hope you all had a fantastic 4th of July holiday. Back at it again this week, and we start off with the ES. The ES right now at new highs here, at new highs beyond the 5,600 level. One thing you'll notice is we have seen this market now reach its 100% target from the key range that we had developed in March. So you had that high right there. You had the impulse sell-off to this low right there. That range gave us a new key range right there, and with an upside target at 56.06 half. That was reached on Friday. The 50% target was reached back at the middle part of June. And we have now seen this target come to fruition. That's something we talked about back at the middle of April. Once we had that initial development, we mentioned that 56.06 half likely the target up ahead. Any pullbacks could be defended for a continuation to the upside. We had a great Friday rejection here that developed, and that triggered a path higher that eventually culminated with the target being reached. So nice continuation play, nice reach of that target. We are now into the 5,600 level. The other thing we mentioned here heading into this portion of the calendar was the seasonality component heading into 4th of July. Any pullback could be a push higher into and post 4th of July for a seasonal continuation to the upside. So now that that's played out, how's the market going to respond here at these highs? Are we going to see some sort of pullback here that develops? And if so, where might we go? The key level to watch is going to be the previous quarter's high price, which is just shy of the 5,600 level there. That's going to be the important level to watch there. If there's any big time rejection that happens above that zone, that could open up a little bit of a pullback here, perhaps into the pivot range below from the monthly perspective. A wider pullback would bring you back toward the 52.80 level, which is where the midpoint is of the previous quarter. So previous quarter's high, previous quarter's low. This right here would be the previous quarter's midpoint. So if there's any rejection up here, that could lead to a bit of a pullback up ahead. So something to keep in mind here as we move forward. As of right now, this market remains quite bullish. Pullbacks continue to be buying opportunities, but if we see a strong rejection develop in this space here, that could open up some sort of pullback up ahead, perhaps to the midpoint of the previous month or the midpoint of the previous quarter. As of right now, everything's still focused to the upside. If we take a look here at the NQ, similar price action here to the NQ, very bullish overall. This market continues to show strength through the previous quarter's high. This one had already reached the 100% target of the key range that was similar to the ES we just spoke about. This market remains very, very bullish. The pullback early last week was an opportunity to buy for a squeeze higher into and post 4th of July holiday. And again, this market remains quite bullish overall. And if we do see a strong rejection of prices above these highs, that opens a path back toward the previous month's midpoint. That could be a bouncing off point, a failure there, and you open up more weakness into the previous quarter's mid, and that would be an opportunity for bulls to pick this thing up and rotate this thing higher. So overall, very strong, very bullish still, but watching for signs of potential rejection that could lead to a pullback up ahead. We're taking a look here at crude oil. You'll see right here, crude oil remains bullish overall, has seen quite a bit of selling pressure since the overnight reopen here, dropping back toward the 8-period average, seeing a little bit of a pullback here off of those highs. But since the strong lows developed here in early June, it's been about 5 weeks of strength overall to the upside, reaching its highest levels in a good long while, 84.52. Those are levels not seen since the end of March, or rather the end of April here. That's about the last time we really saw big time strength, was the end of March here as this thing rallied, and into April where it finally gave up the 82, 81.50 zone and then started on a path of weakness. So this thing has been very bullish since then. And this pullback right here will be an early pullback to keep an eye on for the week. Any pullback into this bullish Pima trigger zone could be an opportunity for bulls to defend and rotate higher back toward 84.50 and perhaps even to prices beyond that, 86 or beyond. So this is an early test for this market here this week. And again, the strong low could be developing here for the morning. It looks decent. Any pullback could be in a higher low opportunity here out of this market moving forward. And if bulls can find a strong low early Monday here, that could lead to a check mark continuation higher into the rest of the week. Looking at gold futures, here's a look at gold. Strong push to the upside here recently. This market remains mostly range bound, super wide range here. Again, the 2280 level on the downside. You have 2450 on the upside, and somewhere here in the middle, 2350 continues to be kind of that middle zone for this market. Still poised and positioned to the upside overall, and any pullback could still be a buying opportunity. But again, this market just has been happily trading sideways within this larger range, likely with an upward bias overall. Looking at the YM compressing tremendously, not looking quite like the ES or the NQ, which are currently sitting on highs. Instead, you can see how compressed this market has been right here, especially after the recent squeeze. This could be a buildup of energy here that leads us to the previous quarter's highs. We could be looking at a move that takes us back toward 40,400 up ahead. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days of compression here. Even if we just make this thing, say, a 10-day range, we can make it obviously much wider as well, up to 13 days. But you can see how compressed this market is. We could be looking at a move that takes us about 1,600 points, maybe even into about 2,000 points of movement up ahead. So there's quite a bit of energy here. If we can get ourselves an upside break, it opens the door to the previous quarter's high and likely new highs for the year. Looking at Bitcoin, Bitcoin had quite a meltdown here on July 5th. New lows, the lowest levels that really hadn't been seen since February of this year. That's about the last time we had been that low. This is a test of the previous quarter's low right there. Previous quarter's low, previous quarter's midpoint, previous quarter's high. Best case scenario is to wipe it out here like we've seen, and a strong low could lead to a reversal back to the middle of the range, which is around 65,000, and then likely to new highs. Do we see 74 to 75 later this quarter, even if it's short term and we rotate back in? Remember, this is a large trading range here, and to take out the recent lows could snap this thing back. It's kind of what happened before, where we had this trading range here, took out the lows, and then snapped back to the upper end of the range. Eventually, we've fallen back down. So right now, keeping an eye on this blue level right there. That's the previous quarter's low right there. To reject that zone would suggest that we could be looking at an outside quarter up at some point later on this quarter. Failure to hold these recent lows, and you start more of a markdown phase up ahead. ETH also with a massive drop on July 5th, a huge drop back down. This thing got it back to the 2,800 level. 2,800 big time support. The upper end of the range is about 4,000. You have the middle zone here at about 3,400, and that's been mostly the range right there. And so again, kind of like the ES, this thing, or rather kind of like Bitcoin, where this thing has dropped down into the previous quarter's low. To hold that low would suggest a bounce back toward the middle of the range, and perhaps even an outside month up ahead toward 4,000, even if that doesn't lead to an upside break and we drop back into the range. So a really nice reversal developing off these lows. That could easily lead to a return back to 3,400 up ahead, perhaps a little bit inside this distribution below, and then you look for a continuation up. Very similar to what happened before. Big drop down, build out, make your move up. So again, 2,800 the key level to watch early this quarter. All right, that is it for now. We'll see how this develops here heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.